Hello, welcome back to Mining Network and Happy New Year. I'm with Dr. Matthew James, the President and CEO of Euro Manganese. Matthew, good to see you.
Good to see you, Peter.
We spoke, I think, back in February of 2023, so quite a while ago now,
Yeah.
coming up to a year. Just kick things off, for those who potentially have missed out and aren't following the Euro Manganese story for now, why don't you give a very brief overview of the company?
Sure. So Euro Manganese is a battery metals company focused on manganese. We have a unique deposit in the Czech Republic, which is reprocessing historical mine tailings to produce a high purity manganese product for the electric vehicle battery market.
Brilliant. And would you mind just run me through your capital structure as it stands?
Sure. So about 50% of our register is institutional. Management and founder probably have about 10 to 15%. And the rest is sort of retail, some of which we can't see behind.
Okay, well, tell me about 2023 because obviously there's been quite a few, I guess, tick boxes that you needed to get done. Some with the land acquisition, some with financing, some with the demo plant. But I guess this now shapes up 2024 as a very pivotal year. But before we get on to what's coming up this year, what happened in 2023?
Yeah, I think those are certainly the three key events for us. First one being the demonstration plant. So that's now installed on site and it's produced both on spec high purity electric metal, which is kind of an intermediate product for us, and then the final high purity manganese sulfate on spec verified by independent labs. So that's key for us, it working, producing on spec material, but also lots of learnings, which is why you have a demonstration plant feeding into the commercial plant engineering.
Obviously, as well as shares, Orion, demo plant, it's another, I guess, quite impressive feat within 2023 was the Mineral Security Partnership, where you've actually been recognized as one of three projects in the world for its outstanding nature, I guess.
Yeah, so the Mineral Security Partnership is a group of governments driven out of the US State Department, but Canada, the EU, Japan, Australia, etc., are part of the Mineral Security Partnership. So it's a government support network. Um, Sustainability is one of their key criteria, and at LME Week a couple of months ago, they named the first three projects to receive that accreditation. And Euromanganese was one of those three, the only one in Europe. That means that we're well known in Europe and but now further afield in the US at the government level, and we those that are receiving that accreditation should get government support. Um, and we're now working through exactly what that government support could mean for the project. But it's a great stamp of approval, as you said.
Yeah. And does that tie in with your other, I guess, venture in Quebec where you'll be creating a processing facility?
Yeah, so the two governments that proposed Euromanganese was both the EU and Canada, and the Canadian project certainly played a part in that recognition because, and for the US as well, having that plant in Canada where we're going to turn metal into high purity manganese sulfate means that that product will be IRA compliant. So very important from both the Canadian and US perspective.
Yeah. And I guess just to touch on that actually, because it's important, because I don't want to give the misconception that you're reliant on this new plant in Canada or anything along those lines. This is a standalone project where you'll be sourcing potentially some of the material from the Czech Republic, but really it's open to everyone, isn't it? So you can pull in manganese from different mines around the world and actually be a production hub in
So,
Quebec.
so it's not, it's putting in high purity manganese metal.
Yeah.
So it's that last step from metal to sulfate. We call it a dissolution plant. But we have announced MOU with MMC out of South Africa, the only other uh, high purity manganese metal producer outside of China. Now, I don't think Chinese metal would qualify,
No.
obviously, but having that MOU with MMC plus metal from the Czech Republic means that that plant, can grow and support the US market. And that doesn't stop us from supplying the US market with sulfate from the Czech Republic either. Again, that material is not coming from a foreign entity of concern. So, is of obviously benefit for the US market.
Oh, okay, so you're making product on site at the moment. Obviously, that will be handy for the offtake discussions that you're going to need to have in 2024. What about, before we go on to that, obviously, towards the end of the year, late November, you've announced 100 million in financing from Orion. Would you be able to just break that down a little bit more for me?
Sure. So, it's been about a 6-month process, significant amount of due diligence done by Orion, concluding in a 100 million US financing package. It's broken down into two 50 million tranches. The first 50 million tranche is a loan convertible into a royalty, and the second 50 million tranche is just a straight vanilla royalty. And for those who are not familiar with royalties, it's a percentage, small percentage, it averages over the two about 3.5% of gross revenues, to pay for that $100 million for the life of the project. The first tranche, which is that loan convertible to royalty, is split into two parts. The first one being 20 million US, which is now in the bank. We'll receive that. The second one, upon reaching some commercial milestones, we will be able to access this the second 30 million tranche.
Could you tell me a bit more about the milestones?
Sure. So there are a level of offtake, 40% of offtake being achieved, and also a strategic investor into the company. So those are the key milestones for that second $30 million.
And what does it mean by a strategic investor? Is that someone who has to take a proportion of equity of the company? So they need to earn over a certain amount of the overall shares outstanding?
It's not necessarily at the company level,
Yeah.
but our preference is for that to occur at the project level. And ideally, an OEM or someone strategic in the value chain that can bring offtake together with an equity investment at project level. And we're talking probably about 10 to 20% at project level, which will be a buy-in to start off with, which the money received by the company. And then for the equity component of the final project financing, they'll contribute their share of the equity as well. So it really breaks down that equity amount that the company needs to raise from the market, makes it a lot more manageable.
Yeah, well, why don't we talk about the financing of the mine? Because obviously the feasibility study that you released, I think, was it back in 2022,
Correct.
indicated around a 750 million capex. So obviously you've got 100 million coming from Orion. It sounds like they want you to sell, what you're basically saying there is part of the project to get the rest of the equity in, and then I assume the rest will be covered by debt.
So it was always the strategy of the company to get a strategic investor in at project level. And that's what Orion, yes, has sort of set as one of our milestones. So um, we have EBRD, the European Bank of Reconstruction and Development, as our second largest shareholder. And we certainly, in discussions with them, expect them to be a cornerstone debt provider. The European Investment Bank as well, we fit squarely in the mandate of the EIB. So we expect them and having discussions with them as well about being a cornerstone debt provider for the company. We think that they will provide more than 50% of the debt, probably sort of two-thirds between those two EU institutions. But then we're also talking to the commercial project finance banks, and those conversations are going very well. They we expect them to fill up the rest of the debt portion, potentially as qualifying as green finance, which will be certainly the first mine in Europe that's qualified for green finance. That plus the equity sell down and the contributions from the strategic investor will probably leave approximately 100 to 150 million dollars to be raised at FID from the equity. Canaccord have the mandate for that equity finance, and we're certainly having some good conversations with some of the larger funds that could, together put that equity in place.
Is it obviously around 40 million market cap at the moment, potentially a gap of 150 million that you might need to be raising? It's obviously by the time you get around to FID though, you should be in a position where you have your permits in place potentially early 2024. if you can secure these offtake partners, the project seems to be very de-risked. But one of the key things, I guess, even before you get to the equity raise, is how commercially viable the project is and how you're going to be proving that. And I think a lot of this is, when we've spoken before, is obviously tied around these offtake discussions around how can you get a binding commitment for a commercially viable price for this project. And have you given any thought to that and how those offtakes might look so that you are receiving a price that makes the mine profitable?
Yeah. I mean, strategically, this is the only EU manganese project in Europe. So we're in a very strong position, particularly when you look at the regulations coming through from the EU about needing to purchase in Europe, you know, 10% mined, 40% processed, 45% recycled in Europe. So for the project finance banks, because there is no LME for high purity manganese, they require a floor price, right? And that floor price will dictate how much debt we can uh, look to put on the project. We're modeling about 65% gearing on debt. So those offtake contracts that we're in discussions with um, have to have that floor price in place. And that effectively is the incentive price required for new production of high purity manganese, um, both here and in the US. Those are our two primary markets. And obviously with the US, again, very supportive regulation in the Inflation Reduction Act and the subsidies that they can get if they don't have any material from foreign entity of concern, i.e. China, which is where over 90% of the high purity manganese market um, is at the moment in terms of production. So the offtakes, we recognize the offtakes are what the market is looking for. Yeah. In terms of re-rating the stock, together with environmental permits, which we should have early in 2024. Um, we're hoping in January. That's all. We're now through the public commentary period in the Czech Republic, and we received no comments from the public or the municipalities. Again, just a testament to the social engagement the company has done, um, keeping everyone, all the stakeholders well informed and of the benefits for the project for the local community. The ESG credentials of the project are second to none. We are remediating a polluting site where these tailings sit at the moment. We're using 100% renewable power. So it is a very beneficial project in terms of cleaning up the site, creating jobs, creating tax, for the Czech Republic.
I think that's one of the main key things with this, isn't it? This isn't a traditional mine in the sense that you'll be digging a big hole in the ground that's never been there before. You're essentially cleaning up some of the waste that a previous operation has done to then pull a material which is crucial for battery metals or for electric vehicles. Um, Talk me through the permitting process if you don't mind, because obviously in terms of next year, the two real big milestones, or a couple of the real big milestones, like we were just talking about with the off-take sale to get the revaluation, but none of that matters without permits, right? So what needs to be done next year on the permitting front?
So, as I mentioned, the environmental social impact assessment um, is very much nearly there. So we're expecting that to come through in January. That will allow us to then go to the next stage of permitting, which is called land planning permit. And that's effectively a more detailed outline of the commercial plant site. Most of the documentation has been done for that. There may be some conditions coming out of the EIA that we have to feed into that documentation, but we should be able to submit that very shortly thereafter. And then the final stage is your construction permit. And that will come out of the feed engineering documentation, which is what Wood. We've appointed our EPCM contractor, Wood, out of Australia, um, and their Milan office. And once we get through the feed engineering, about 2/3 of the way through the feed engineering, we can provide the documentation for the construction permit, which will probably then be about a 3-month process following that submission.
Okay, so come to Q3 2024, permits in hand. Do you think off takes, how I guess how ambitious or how optimistic are you that you'll be able to line all of this up for the FID decision that you were talking about end of 2024?
Yeah, so we have one term sheet in place at the moment.
Yeah.
We're expecting more in the first half of 2024. And we certainly feel that once we get a couple more, then we'll start to see a bit of a domino effect. The there isn't that much high purity. Our plant will be effectively what's available in Europe,
Yeah.
and with the certainly increase in high manganese chemistries, which is becoming more and more prevalent um, from cathode manufacturers. Both Umicore and BASF have high manganese chemistries. We're now starting to hear that the OEMs are understanding the benefits in terms of the high manganese chemistries look to have the lowest cost per kilowatt hour. And as we're moving from the premium into the entry and middle market, the batteries have to become cheaper. They can be sort of 30 to 50% of the cost of a vehicle. So when the OEMs are talking about a less than 20,000 euro vehicle, they have to have lower cost batteries. And that's where high manganese chemistries will come into play.
Yeah, agreed. And I think that's always been there's been a few benefits of manganese throughout the last years. One is that it's traditionally less volatile than the other battery metals like cobalt or lithium, for example, and obviously the cost is usually a bit lower. But you did mention there that there is a 90% production rate coming out of China. Um, and you were mentioning a few things there, so the European Act, and then you also had the Inflation Reduction Act. How are you seeing that, even from your anecdotal conversations with investors and other funds, or even the OEMs at the moment? Are people really starting to realize that they need to secure more manganese, or is it really we'll get it from wherever's cheapest? And that obviously at the moment is China.
Yeah, I think there is still a little education required. Um, when an OEM looks at their bill of materials for a battery, manganese is actually quite small because
Yeah.
it is the most affordable of the battery metals. So they've very much been focused on lithium, nickel, cobalt. They are now getting to graphite and manganese, those lower cost components. And whilst it's easy to say, oh, China's cheapest, when you overlay the regulations and the ESG criteria, and this is becoming more and more important, particularly in Europe, then getting it from China just doesn't work. I mean, we've just seen the French government put out a list of um, companies or cars that qualify for their battery subsidy. There are no Chinese cars on it, and even with the cars, like Tesla's Model 3 doesn't qualify, right? You can't have a battery in those cars which is not ESG to European standards. And the Chinese can't meet that. The coal is where their power comes from. The ESG standards, the Institute of Manganese, the International Institute of, sorry, the International Manganese Institute have just done a study on ESG, um, and the Chinese have some significant gaps that have been identified on the ESG compliance. So recycling, ESG compliance, but also just security of supply, not being exposed to the Chinese supply chain is what is going to make the difference in terms of OEMs committing to non-Chinese sources.
Yeah. How does that work with with your project? Because obviously, I don't think you're not making high purity manganese sulfate monohydrate on site, are you?
Yes, we
You
are.
are.
Yeah, absolutely. So the two products we make is the high purity um, manganese metal. We can sell that metal into the market, or we can move it to another location and make the sulfate there. But two-thirds of our metal that we make on site in the Czech Republic is converted into high purity manganese sulfate, um, and that will be for the European market.
And will you be able to, obviously, because of the economics and the, I guess, the pricing that you used in the feasibility study was around 3, 4 times the price that manganese is at the moment. Do you think even with this backdrop of companies not being able to acquire as much manganese from, say, China, will you be able to command such a higher price to incentivize the mining in you?
Well, there's a fundamental um, misnomer in that Chinese price is 3 times what we have. So yes, the Chinese are effectively at cost of production or even below at the moment. Um, but if you look at the index, there's only one index for high purity manganese sulfate that people look at to get the price. That's X Works China, but it's a range of different qualities, right? And it represents about 13% of the market. That's what spot is, right? If you go to China as a Western buyer and you provide them with Western specs that you require, our market intelligence says that you'll be paying somewhere between $1,400 to $1,600 for Western spec from a Chinese producer. Now that's still ex works, right? You've now got to transport that to Europe or the US. That's $250 a ton by the time you take in inland transportation to your port, shipping, and then inland transportation in Europe or the US. So now you're at $1,850. That's still a Chinese product, right? You then look at what is an ESG premium to have ESG compliant material and your security of supply of buying in Europe and not buying from a Chinese supply base, which is fairly opaque, no traceability on the material. And so we're looking at a sort of 20 to 30% premium on top of that for those those benefits that we can bring to an OEM.
Yeah.
So that's the education that we're talking about earlier, that the Chinese price index does not reflect the European price today. Again, our market intelligence from non-Chinese sources of supply say that non-Chinese material in Europe is being sold at around $2,500 a ton, which is where our floor price starts for our project. So, that's a very important point in terms of understanding the high purity manganese market. Again, it's not one of the benefits of manganese, though, it's not the ore supply that's in shortage, right? It mainly comes from Africa and Australia, goes into China for processing. But if you want non-Chinese, the bottleneck is in the high purity processing capacity. There's none in North America, and ours will be the only primary resource in the EU.
So that's perfect, really, because I think one of the key things that investors looking at this at the moment, obviously, we've seen the shift downwards in manganese price over the last couple of years. And I think a lot of people looking at any manganese project now that in the Western world, because China are producing a lot of the time at cost or below, um, they worry that, I guess, the Chinese are trying to price everyone else out of this market. And without additional government subsidies or maybe even the regulations that you're talking about there, it seems very hard for the West to compete in this battery metal space, especially in graphite, rare earths, and manganese by the looks of it. Um, but based on your intelligence of being able to have offtakes at around 2,500, that for you, you were saying there was incentive enough for you to actually go into production and make a margin on the mine.
Yeah, I mean, it's the first 7 years that we need that floor price because that's the period that we repay the debt. And about 40% of our cost is debt repayment in those first 7 years. Once that debt's repaid, then our margin should increase substantially. We still make a small profit at those floor prices, but it doesn't matter what forecast you look at from you know the different market analysts that are putting out supply demand forecasts for high purity manganese, they all forecast a deficit, right, globally, even including Chinese supply. And the only difference between these forecasts are based around some of the assumptions they use. It changes when that deficit's going to hit, right? So yes, we're talking about a floor price, but the upside, just as when lithium was in deficit or nickel's in deficit or any metal in the mining industry goes into a deficit, we're expecting to see a significant price appreciation. The capital in China is very cheap compared to the West. So if the Western OEMs battery supply chain markets want localization of supply, there has to be an incentive price of around the levels we're talking. Otherwise, there will be no Western high purity manganese produced. It boils down to that. Um, Obviously, government subsidies will help in making that more competitive, or a lower cost for the battery industry, and that will obviously help bring in the OEMs. But I think the OEMs, you know, the difference between, call it, 1,700 if you're 1,800 if you're buying from China, and 2,500, it's probably about $20 a battery. Now, for the IRA, you're putting at risk $3,750 worth of subsidy. It's kind of a no-brainer, right? To ensure that you're not buying from a foreign entity of concern to secure that subsidy. Um, the EU government has just announced $3 billion of, again, subsidies for the battery industry focused around sustainability. So again, to access those type of funds, the battery industry has to source from sustainable sources of supply. I've talked about, the benefits of our project. We have a CO2 footprint. If you just boil it down to CO2, we have a CO2 footprint, which is 1/3 of the incumbent industry in China. So it all has benefits.
One of the other things, as whilst we're still talking about the economics and the commercial viability, is obviously um, with royalties, it does sometimes skim some of the sort of the froth at the top. Some people say, don't they? So it reduces the amount of revenue that you'll be bringing in turn because obviously you'll be paying 3% potentially out to a right. How much? Obviously, it's hard to say without releasing a new economic study on that. But how much would that impact the economics?
It doesn't impact the economics that much because, for debt, we have to pay interest anyway. Yeah. Right. Now, it is for the lifetime of the project. But as you mentioned, market cap $40, $50 million today. We've raised 2 times our market cap for 3% of the revenue. If we had to go and get that as equity, we'd be giving 2/3 of the project away. Yeah. So again, it's a very effective way of raising capital for the company today, which is non-dilutive to the existing shareholder base, which is very much our focus. Um, so, and again, selling down at the project level means that we can get that um, equity injection into the company, or the cash in, the buy-in at project level valuations, not company valuations. When we see a significant re-rating opportunity for the stock. Um, our net present value of the project is $1.8 billion, and we're, 40, $50 million market cap. Once we, get permits, get offtake contract, then there's execution risk. But a lot of that permitting risk, market risk has been dealt with. And so, yeah, you're down to execution risk, which should mean that the stock should be a lot higher.
Yeah, I do agree with that. You often find within as you're sort of getting towards this sort of Lassonde curve, I guess. How do you learn? Right at the bottom of it, I guess, in terms of getting ready to start production, right, or FID at least. What is the main things for you? I guess the key priorities for next year. Obviously, you've got the offtakes, which I think commercially will make this project viable. Um, how far along that process are you now in terms? Because I know you've been super busy with chairs, and you've also had the Orion deal, and obviously you've been doing the demo plant. There's been a lot going on in 2023. But I guess, yeah, have you already started sending your product from the demo plant to the OEMs?
So the samples from the demonstration plant are not required to get offtake contracts. The offtake contracts will have qualification processes in them, but we don't need the demonstration plant product to get those offtake contracts. Having said that, now that the plant is producing on-spec material, we can start sending material to customers in a lot larger scale than from our pilot plant. And the pilot plant that produced kilograms of product, that has already been sent to a number of customers. But the demonstration plant in 2024 should be able to provide tons of products to the customers for their next stage of qualification. And the idea as well is that that will um, shorten the commercial plant qualification as long as it's producing similar spec material. In terms of, we are progressing on a number of fronts with offtake contracts. We are looking for this equity investment at project level,
Yep.
and that's going to take a bit more time when you tie it with an offtake contract. But they're progressing well, and I think in the first half of 2024 we'll see term sheets, which will then convert into offtake contracts. You did touch on one thing about CHES and land access. That's another key deliverable that we've achieved in 2023. We now have access to over 85% of the resource, and we're finalizing the last 15%, which is optional. We don't have to have it to have a project, but we'd like to have it. But that's progressing well. We've also completed all the rezoning, and that's of the mining area dedicated now to a mining, and the commercial plant area being rezoned to industrial. That sounds fairly simple. That's a 3-year process in the Czech Republic. So when we look forward to 2024 now, I think of about 4 key work streams. Offtake being one, um, engineering, so getting the feed engineering completed with Wood, um, our EPCM contractor. Those two things will um, then allow us to finalize the debt. And then with the debt, we can put in place the equity. So there's the financing, that's the third work stream. Then the final work stream is that, those last 2 permits, the land planning permit and then the construction permit. Those are the 4 key deliverables to then allow us to make a final investment decision, which we expect will probably be in about 12 months' time.
Good. So potentially before the end of 2024, very early 2025, you'll be in a position where you could start construction.
Yes, but we do expect to do some early works. We're doing some geotech drilling, some infrastructure relocation, some demolition of the buildings on site where we are at the moment. Uh, that $30 million from Orion will allow that type of activity to occur. So, um, so that once we make the final investment decision, it will be construction, not site preparation. So that again shortens our build time, which is from the feasibility study 2.5 years. So that could, I should say, bring that to a 2-year build from then.
Brilliant. So by 2027, we'll start seeing
End of 2027, I think, is probably realistic. Yeah.
the first manganese enter the European market from Europe. That's really amazing. Yeah. Matt, I hope it all goes well. Thank you very much for your time.
Thanks, Peter. Thanks for the opportunity to chat today.